Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Friday, March 1st, 2024. Let's take a look at the charts. Start with the big picture as always, and then work our way into the day itself. We came off of the 251.76 channel top in late December, and when we were testing it, we'd mentioned that once tested, the market is then susceptible to falling back to channel support. Then in the mid 170s, now at 168.82 over the following 3 to 5 months. That move did complete inside of 2 months, and now that we've tested channel support, we are now saying that you should allow for the 251.76 channel top over the next 3 to 5 months or sooner. There's no clarifying buy signal for that as an expectation. That would materialize today if we closed at 209.90 or higher. In other words, a weekly settlement above the 207.83 trend-defining descending one-third speed line by a full 1% margin. The 207.83 speed line, we've not tested it this week. We've come very close to the 1% mark. The daily chart, we've certainly pushed into the 1% zone. 205.59 today. It is an area that can absorb buying through the month of March, perhaps. We've been saying that when you test, once we tested the channel bottom, if you recall, if you've been watching the series now for the last month or two, when we were testing channel support, we'd mentioned the descending one-third speed line as a 3 to 5 week target. We're a solid 3 weeks into that right now, maybe a little bit more. A 205.59, 207.83 in the weekly chart, able to contain buying through March. And now that we are essentially testing it, the market's susceptible to falling back into the upper 160s again. I say again because it's the channel bottom so much, not so much the actual low from February, back into the upper 160s over the next 3 to 5 weeks. That is the play right now. Now, do I expect 168.98? Is it a clear-cut target? No, it's not, but you can act on it. You could short the market. Which is to mean, you could either short the stock or perhaps reach for, 170, 165 strike out of the money puts that don't expire for at least 3 months. I would go several months out on that 3 to 5 week play. Now, what would be the clear-cut indication for 168.98 would be a settlement over the next week or two below the 182.30 channel bottom. So I'm kind of breaking the time frames down. 205.59 is your resistance really through March. And from here, the market's susceptible to falling back to 168.98 over the next 3 to 5 weeks. Now, 3 to 5 day swing traders can trade 205.59 resistance, 207.83 on the weekly chart, and buy 192.37 channel support. We could fill this wedge out for the next 3 to 5 days quite easily. But I don't expect 192.37 to hold long term for 3 to 5 days, perhaps. I have it as a session containment level only. And in fact, if we were to close below it over the next day or two, 182.30 is likely. 182.30 is really your 1 to 2 week time frame. For those of you who trade typically the 1 to 2 week time frame, you're selling the 205.59 to 207.83 region, taking profits at 182.30 and vice versa, buying 182.30 if given the opportunity. The market then poised to rotate back into the low 200 area within a week or two. But this is just a 1 to 2 week play. Ultimately, if we close below 182.30 over the next couple of weeks, we're just another week or two at the most from falling to 168.90. Hence the 3 to 5 week time frame back to 168.90. Those are the two longer term levels right now on the charts. 168.90 goes back some, 8 months or so to this July high, as does the 205.59 speed line. So this is the 3 to 5 week time frame. But once again, if we close above 205.59 today, and let's make that at 209.90 or higher, 1% beyond the same speed line, but on the weekly chart, I see the 251.76 to 253.49 region as a realistic 2 to 3 month target, quite possibly inside of 2 months, 5 to 8 weeks. I could see that playing out. And that would be the objective. So if we close at 209.90 today, if we're trading at 210, 211, 212, somewhere in there with 15 minutes to go in the day, you may consider, this is completely up to you. Maybe you wait the weekend out, let the volatility contract a bit if it may, but it really is up to you. Bottom line, if we close at 209.90 or higher today, you may consider reaching for 245 or 250 strike out of the money calls that don't expire. I would go 6 months out on that. It's a 2 to 3 month move, perhaps. I would go twice the distance out in terms of the strike expiration relative to the projected time frame for reaching that objective. That is my general rule of thumb. And the inverse is true here as well. As we're testing 207.83, once again, you could reach for 170 or 165 strike out of the money puts that don't expire. I would go 3 months out on that. That is a 3 to 5 month play as we speak. So let me go back to the downside today. I do want to flesh that out a bit. I have 199.49. We did close above that level numerically. It can contain intraday selling pressures, and above which the 205.59, 207.83 area in reach today quite easily. If we break 199.49 today, 192.37 is expected, where we can bottom out for the day, possibly into next week, where we could round back up into that low 200 area again within a matter of 3 to 5 days. If we close today below 192.37, within a matter with that kind of volatility, 1 to 2 days, we could test 182.30, where the market could bottom out through next week. Maybe you shorted the market this week in anticipation of the low 180s. In fact, short-term options traders could consider, as we're testing the 205, 207 region, reaching for 183 or 185 strike out of the money puts that don't expire for at least a few weeks. This is a 1 to 2 week play to the downside. So forth and so on, all the way back to 168.98 perhaps. But 168.98 is not clearly indicated until we close below 182.30. This is rising gradually, and it becomes a pretty solid midpoint between 205.59 to 168.98 as we move through next week. Upside today, if we happen to push through, I don't see an open above, but you never know. The 207.83 level, 214.29 would be in reach today. And if we close at 209.90 or higher today, we are, yes, expecting the low 250s or this channel resistance within 2 to 3 months at the most. But next week, I would expect 222.48, where we can quite easily top out on a daily basis, possibly a little longer. We'll be showing that to you if we close above 207.83 today, the week itself. And if we do, once again, bullish continuation through March into April, the low 250s dropping gradually expected inside of 2 to 3 months. I'm going to leave it at that. Please click like, share, subscribe. This week we put out 2 stock picks, Google, Macy's. You can check out both of them by going to wickedstocks.com, taking advantage of our 5-day free trial. You can see our daily triple Q, our daily SPY analysis that we put out every single day, just like you see in Tesla. We do it every day in the SPY and the triple Q. And then every week on Sundays, you'll receive the S&P 500 index analysis, the NASDAQ 100 index analysis, and the TLT, that is the long bond ETF. So take advantage of that. I'll be back Sunday afternoon with Monday's Tesla, and you have a great weekend.